Most people think trading is difficult because the market is complicated. They believe success comes from finding secret indicators, secret strategies, secret systems. They think professional traders know something magical that ordinary traders do not know. But after years in the market, many traders slowly realize something surprising. Trading itself is actually simple. The hard part is not understanding the market. The hard part is controlling yourself. And that is exactly what I want to talk about in this video. Trading is simple, but not easy. And there is a very important difference between those two things. Because once you truly understand this, your entire approach to trading starts changing. You stop searching for magic solutions, you stop overcomplicating charts, and you start focusing on the real challenge. Your mindset, your emotions, your discipline. If you stay with me until the end of this video, you will understand why trading feels difficult even when the concepts are simple, why most traders struggle emotionally, and how you can slowly build the mindset required for long-term consistency. And if you want to continue building a strong trading mindset, consider subscribing to Bull Mindset. This channel is focused on trading psychology, discipline, and long-term consistency. Now let us begin with a simple truth. The principles of profitable trading are usually simple. Manage risk, control emotions, wait patiently, take high-quality setups, avoid overtrading, stay disciplined. Most traders already know these things. The problem is not knowledge. The problem is execution. Now let us go deeper. Imagine someone learning trading for the first time. At the beginning, they believe the hardest part is understanding charts. So they spend hours studying indicators, patterns, strategies, technical analysis. And yes, these things matter. But eventually, they reach an important realization. They already know what they should do, but they still struggle to actually do it consistently. And this is where trading becomes psychologically difficult. Now let us talk about emotions. Trading becomes hard because money creates emotional pressure. Fear appears, greed appears, impatience appears. And under emotional pressure, people stop behaving logically. Now let us talk about fear. A trader enters a good setup. The trade moves slightly against them. Fear appears immediately. Their heart rate changes. Their mind starts imagining losses. So they close the trade too early. Then the market moves exactly as planned without them. Now frustration appears. Now let us talk about greed. A trader has a profitable day. They feel excited. They feel confident. They believe they understand the market perfectly. So they increase risk. They force more trades. And slowly, discipline disappears. This is why trading feels difficult. Not because the principles are complicated, but because emotions interfere with execution. Now let us talk about another important truth. Trading is simple because the rules are clear, but it is not easy because human behavior becomes emotional under pressure, and emotional behavior creates inconsistency. Now let us move into real trading examples. Imagine a trader with a profitable strategy. They know their setup, they know their risk rules, they know their trading plan. But after 2 losses in a row, frustration appears. They stop trusting their system. They take random trades. They revenge trade emotionally. Now the problem is no longer strategy. The problem is psychology. Now imagine a professional trader. They experience the same losses, but they remain calm. They continue following their rules. They trust the process. Their emotions do not control their decisions. This is the real difference between emotional traders and disciplined traders. Now let us consider another situation. A trader sees price moving quickly. Fear of missing out appears immediately. They enter late emotionally. The trade fails. Now imagine a disciplined trader. They see the same movement, but they wait. If the setup is gone, they accept it calmly. They do not chase emotionally. This emotional control protects them from unnecessary mistakes. Now let us go deeper into human psychology. The human brain is naturally emotional. We seek pleasure, we avoid pain, and trading constantly triggers both. Winning feels exciting, losing feels painful. And because of this emotional cycle, many traders become reactive. They stop following logic. They start following feelings. Now let us talk about patience. Patience sounds simple, but emotionally, patience is extremely difficult. Waiting feels uncomfortable. Doing nothing feels uncomfortable. Watching the market move without participating feels uncomfortable. And because of this discomfort, traders force trades. But profitable traders understand something important. Patience protects capital. Patience prevents emotional mistakes. Patience creates better decisions. Now let us talk about discipline. Discipline sounds simple too. Follow your rules. Control your risk. Stay calm. But discipline becomes difficult when emotions become intense. After losses, emotions want revenge. After wins, emotions want excitement. And this emotional pressure constantly tests your behavior. Now let us talk about another important truth. The market exposes emotional weaknesses. If you are impatient, trading will expose it. If you are greedy, trading will expose it. If you are emotional, trading will expose it. If you lack discipline, trading will expose it. This is why trading becomes mentally exhausting for many people, because trading forces self-awareness. Now let us talk about overtrading. Most traders do not overtrade because of strategy problems. They overtrade because of emotional pressure, boredom, fear of missing out, the need to recover losses quickly, the need for excitement. These emotional triggers create unnecessary activity. Now let us talk about consistency. Most traders want consistent profits, but consistency comes from consistent behavior, and consistent behavior comes from emotional control. This is why mindset matters so much. Now let us go deeper into long-term thinking. Professional traders think differently. They do not judge themselves based on one trade, or one day, or one week. They focus on long-term execution. This removes emotional pressure because they understand one outcome does not define them. Now let us talk about identity. Many struggling traders identify emotionally with results. If they win, they feel successful. If they lose, they feel like failures. But professional traders separate identity from outcomes. They focus on process, not ego. This creates emotional stability. Now let us talk about another important truth. Profitable trading is repetitive, and repetition feels boring. Many traders secretly want excitement, but excitement usually creates emotional mistakes. Professional traders accept boredom, because boring trading is often disciplined trading. Now let us talk about confidence. Most people think confidence comes from winning, but real trading confidence comes from following your process. It comes from discipline. It comes from emotional control. It comes from knowing you can trust your behavior even during difficult periods. Now let us talk about emotional recovery. One of the hardest parts of trading is recovering mentally after losses. Many traders carry frustration into the next trade, and this emotional baggage creates more mistakes. Professional traders understand the importance of emotional reset. After difficult sessions, they pause, they reflect, they calm their mind, they return with clarity. Now let us talk about another major psychological trap, the need to be right. Many traders care too much about proving themselves correct. They hold losing trades too long. They refuse to accept losses. They move stop losses emotionally, because emotionally, being wrong feels painful. But professional traders think differently. They understand losses are normal. They understand protecting capital is more important than protecting ego. Now let us talk about simplicity. Many traders overcomplicate trading because they believe complexity creates success. So they add more indicators, more systems, more analysis. But often, this creates confusion. Professional traders simplify. They focus on execution. They focus on emotional discipline. They focus on risk management. Now let us talk about another important truth. Trading success is often about doing less. Less emotional trading. Less impulsive trading. Less overanalysis. Less overtrading. And emotionally, this feels difficult because humans naturally want action. Now let us talk about mental frameworks that make trading easier psychologically. The first framework is process over profits. Focus on execution, not money. The second framework is probability thinking. No setup is guaranteed. Accept uncertainty calmly. The third framework is emotional neutrality. Do not become too excited after wins or too discouraged after losses. Stay balanced emotionally. The fourth framework is long-term thinking. Judge yourself over months and years, not individual trades. Now let us talk about practical exercises. One powerful exercise is journaling. Write down your emotional mistakes. Write down your thoughts before entering trades. Write down your reactions after losses and wins. This builds emotional awareness. Another exercise is slowing down decision-making. Pause before entering trades. Ask yourself honestly, am I following my plan or reacting emotionally? Another helpful practice is fixed risk management. Keep your risks stable. Do not increase risk emotionally. Another exercise is reducing trade frequency. Fewer trades often improve emotional control dramatically. Another important exercise is reviewing discipline daily. At the end of each day, ask yourself one important question. Did I follow my rules? Not did I make money? Now let us go even deeper. Most traders think success comes from learning more information, but many times, success comes from mastering simple behaviors repeatedly. Patience, Discipline, risk management, emotional control. These things sound simple, but under emotional pressure, they become difficult. Now let us talk about emotional maturity. Emotional maturity in trading means accepting losses calmly, accepting uncertainty calmly, accepting slow progress calmly. This emotional stability creates consistency. Now let us talk about self-awareness. Self-awareness means understanding your emotional patterns, understanding what triggers fear, understanding what triggers greed, understanding when emotions start controlling behavior. Professional traders study themselves constantly because they know psychology controls performance. If this video is helping you understand the real challenge of trading, consider subscribing to Bull Mindset, because mindset is what separates emotional traders from disciplined traders. Now let us move toward the final message. Trading is simple because the principles are clear, but trading is not easy because human emotions interfere with execution. Fear interferes, greed interferes, impatience interferes, ego interferes, and this is why mindset matters so much. Let me leave you with one final thought. Most traders are not failing because trading is too complicated. They are failing because emotional behavior keeps interrupting simple, disciplined actions. If you improve your mindset, your decisions improve. If your decisions improve, your consistency improves. And if your consistency improves, profitability becomes possible. And if you want to continue building that mindset, subscribe to Bull Mindset. I will see you in the next video. Thanks for watching.